Well, yes, ICICI Bank's net interest income number for Q1 FY23 expected to breach that 13,000 crore mark, 4.5% up when I'm looking at it sequentially, and 20 plus percent growth when I'm looking at it year on year. So that engine keeps moving. When I'm looking at operating profit, though, absolutely flat sequentially and up around 16% when I'm looking at it year on year. It's expected to come in above that 10,000 crore mark. Provisions, though, are expected to remain slightly elevated versus, of course, Q4 of FY22. Provisions, in fact, will trend around 75% higher after that stellar Q4 quarter in terms of asset quality for ICICI Bank. And those will come a shade below 2,000 crore is the street's expectation. When we're looking at PAT, therefore, PAT will trend slightly lower. Of course, two things impacting the PAT. One is your treasury losses, and second is the slightly higher provisions when I'm looking at it sequentially. So your PAT is expected to come in around 6,300 crore or thereabouts. That's still a solid 36.5% growth when I'm looking at the number year on year. NIMs are expected to be largely stable, around about 4%. In terms of balance sheet growth, both sides of the balance sheet expected to grow very well. 19% growth on the advances side of things, almost 2.5% when I'm looking at it sequentially. Solid growth, given the seasonality, and the deposit side as well expected to grow around 16.5% year on year, almost 1.5% sequentially. That number expected to close in to that 11 lakh crore mark. Even the net advances close in into the 9 lakh crore mark. So clearly good growth tailwind on both those fronts. When I'm looking at what are the key monitorables to look for, of course, asset quality, especially on the retail side, will be looked out for, and the MTM treasury losses, which also will be the key as to how the numbers play out. So couple of things which the market will be looking out for.